Welcome back to the channel, finance and investment enthusiasts. In today's video, we're taking a detailed dive into four major companies within the basic materials sector: Air Products and Chemicals, Ecolab, Linde, and the Sherwin-Williams Company. These companies play significant roles in industries ranging from industrial gases to chemical solutions and coatings. Let's jump straight into the numbers and see how these companies compare across several key financial metrics. The price-to-earnings ratio is one of the most commonly used metrics in evaluating a company's value, giving us insight into how much investors are willing to pay for a dollar of the company's earnings. Among our four companies, Ecolab leads with a trailing 12 months P/E ratio of 41.86, indicating a higher valuation compared to peers. This suggests that investors are willing to pay a premium for its earnings, possibly due to its dominant position in the water and hygiene services industry. Sherwin-Williams follows closely with a P/E of 35.29, signaling a strong market sentiment toward its future earnings potential in the paint and coatings sector. Linde comes next with a P/E of 32.50, reflecting its solid position in the global industrial gas market. Finally, Air Products and Chemicals has a relatively lower P/E ratio of 24.91, making it the most conservatively valued of the four. This lower P/E might suggest that APD's growth is priced at a more reasonable level, or that investors are less bullish on its short-term growth prospects. When we shift to the 5-year average P/E, Ecolab has maintained its premium valuation with an average of 40.00, followed by Linde at 29.61, Air Products at 27.84, and Sherwin-Williams at 24.44. This shows that Ecolab has consistently been valued higher, likely due to its stable earnings growth and market leadership in water purification and hygiene products. Looking at the forward P/E ratios, we notice a similar pattern. Ecolab still commands a higher valuation at 34.14, followed by Sherwin-Williams at 29.81, Linde at 28.19, and Air Products at 22.36. Forward P/E ratios give us a glimpse into expected earnings, and it's clear that investors remain optimistic about Ecolab and Sherwin-Williams in particular. The price/earnings to growth ratio takes into account a company's expected growth, offering a more nuanced picture of its valuation. Here, Ecolab shines with a price/earnings to growth ratio of 2.52, suggesting its earnings growth is relatively well priced. Sherwin-Williams follows with a price/earnings to growth of 3.12, Linde at 3.40, and Air Products comes in at 4.72, which might indicate that its growth is more expensive relative to its earnings than the others. However, a high price/earnings to growth ratio can also suggest the company has strong growth prospects that could eventually justify its higher valuation. Insider ownership gives us an idea of how much stake company executives have in their firms, which can be an indicator of their confidence in the company's long-term prospects. Ecolab leads the pack here with an impressive 11.12% insider ownership. This is a huge vote of confidence from its leadership, suggesting they are highly invested in the company's future success. Sherwin-Williams follows with 8.17% insider ownership, also a strong sign of commitment from its executives. Linde and Air Products have relatively lower insider ownership at 1.76% and 0.74%, respectively. While these figures are lower, they are still worth considering, particularly in comparison to other firms in the industry where insider ownership may be minimal. Now let's shift our focus to profitability and efficiency metrics, starting with return on equity. Sherwin-Williams stands out with a staggering return on equity of 68.07%, making it incredibly efficient in generating profit from shareholders' equity. This is a fantastic indicator of its operational strength. Ecolab follows with 21.61%, then Air Products at 17.53%, and finally Linde at 16.39%. While these figures are lower, they still represent strong performance, particularly when compared to industry averages. When it comes to return on assets, Sherwin-Williams again takes the lead with 10.72%, followed by Linde at 8.05%, Ecolab at 7.98%, and Air Products at 7.55%. Return on asset measures how efficiently a company is utilizing its assets, and Sherwin-Williams clearly excels in this area. Finally, return on invested capital is another key metric, and Sherwin-Williams dominates here as well, with a whopping 22.68%, followed by Ecolab at 15.18%, Linde at 14.15%, and Air Products at 9.16%. Sherwin-Williams' ability to generate high returns on its invested capital makes it an attractive option for long-term investors looking for efficient capital deployment. Share buybacks and dilution can significantly affect shareholder value. Both Ecolab and Sherwin-Williams have been reducing their share counts with compound annual growth rates of -1.10% and -1.60%, respectively. This reduction suggests they are committed to returning value to shareholders through buybacks. Air Products has seen a flat evolution in shares outstanding, indicating a neutral stance on buybacks. On the other hand, Linde has increased its share count by 5.69% CAGR, which might indicate that the company is raising capital to fund new investments or acquisitions. In terms of earnings per share, Linde stands out with an EPS of 14.82, followed by Air Products at 12.02, Sherwin-Williams at 10.88, and Ecolab at 6.11. While these are impressive figures, the real story lies in their growth potential over the next 5 years. Ecolab is projected to have the strongest EPS growth, with a compound annual growth rate of 16.60, followed by Sherwin-Williams at 11.32%, Linde at 9.55%, and Air Products at 5.28%. Ecolab's robust growth potential is likely a key reason for its higher PE ratio, as investors see significant upside in its future earnings. When it comes to free cash flow, the evolution over the last decade tells an interesting story. Sherwin-Williams leads with a 13.24% compound annual growth rate in free cash flow per share, followed by Linde at 10.41%, Ecolab at 8.81%, and Air Products, which experienced a negative free cash flow growth rate of -24.61% compound annual growth rate. This might raise concerns about Air Products' ability to generate cash, especially considering the capital-intensive nature of the chemicals and industrial gases industries. For dividend-focused investors, Air Products offers the highest yield at 2.36%, with quarterly payments of $1.77 and very consistent growth during the last decade with 9.54%. However, its free cash flow payout ratio is over 100%, being necessary to be more cautious. Continuing, Linde comes in second with a yield of 1.15% and quarterly payments of $1.39. Surprisingly, its growth rate during the last 10 years is lower than the Air Products one, but its free cash flow payout ratio seems healthier, around 55%. Ecolab offers a more modest 0.98% yield with quarterly payments of $0.625. Unfortunately, their last decade growth rate is lower at 6.59%. Finally, Sherwin-Williams boasts an impressive 0.74% yield, with quarterly payments of around $0.715. The free cash flow payout ratio in this case is lower, and its growth rate is the higher one between 4 companies. Now, let's continue with margins. In terms of operating margins, Sherwin-Williams continues to demonstrate its operational excellence with a profit margin of 10.92 and an operating margin of 16.27%. Linde leads the pack in operating margin with 25.31%, closely followed by Air Products at 23.01%, and Ecolab with a lower operating margin of 15.71%. The profit margin figures reflect similar standings, with Air Products at 21.18%, Linde at 19.49%, and Ecolab at 10.95%. These margins reflect the company's ability to turn revenue into profit, with Air Products and Linde showcasing strong profit generation capabilities. In terms of the evolution of revenue and earnings, Sherwin-Williams has seen the most positive evolution, which has been reflected in its market price, achieving a return similar to the S&P 500 ETF, VO, over the last 5 years. Air Products has also seen positive revenue and earnings growth, and their stock performance has slightly lagged behind the broader market. Finally, Linde and Ecolab, on the other hand, have shown flat evolution of revenue and earnings, and this has been reflected in its market price, which Ecolab underperforming the VO and Linde surprisingly overperforming by far the SP 500 during the last 5 years. In terms of debt, Linde has the lowest debt/EBITDA ratio of 1.62, indicating a lower reliance on debt financing. Air Products, Ecolab, and Sherwin-Williams all have higher debt/EBITDA ratios, with 2.30, 2.58, and 2.73, respectively. While these levels are not alarming, they suggest that these companies are more leveraged than Linde, which could impact future profitability if interest rates rise. However, When we look at debt/free cash flow, the numbers tell a different story. In this case, all 4 companies have a free cash flow to debt ratio over 3. That is what I consider reasonable, or the maximum ratio that I want in the company. When looking at stock price performance over the last 52 weeks, Ecolab and Sherwin-Williams have both delivered impressive returns of 51.37% and 51.53%, respectively, outperforming the market. Linde posted a solid return of 29.76%, while Air Products lagged with a 4.45% return. Despite the challenging market conditions, ExxonMobil has shown resilience, making it a more stable choice for investors. In terms of market capitalization, Linde is the clear leader with a market cap of $227.77 billion. Sherwin-Williams follows with $96.15 billion, Ecolab with $72.50 billion, and Air Products with the smallest market cap at $65.75 billion. Now, let's talk about the crystal ball moment: analyst expectations and fair values. Analysts have set varying price targets for these companies over the next 12 months. Air Products has a price target of $300.51, representing an upside of 0.35% from its current price of $299.46. My fair value estimates tell a very different story. For me, Air Products is close to its fair value at $270.01, suggesting it is overvalued right now. Continuing with Ecolab's price target is $256.11, which actually represents an upside of 0.14% from its current price of $255.76, indicating that analysts see the stock as potentially fair valued. And for me, Ecolab, with a fair value of $197.83, appears currently overvalued. Now, Linde has a price target of $487.19, with an upside of 1.14% from the current $481.68. And for me, with a fair value of $380.14, can indicate an overvaluation of this company. Finally, Sherwin-Williams' price target is $370.68, representing a modest downside of 3.45% from its current $383.93, with a fair value for me of $274.81, which is not close to the current price and can indicate an overvaluation. These valuations indicate that while there is some potential for growth, investors should tread carefully and consider these stocks' current pricing relative to their intrinsic values. So, what can we take away from this analysis? Each company offers its own unique strengths. Sherwin-Williams stands out for its impressive operational efficiency, high return of equity, and strong dividend growth. Ecolab shines with its superior insider ownership and exceptional growth potential. Linde has a solid balance of profitability, low debt levels, and robust market performance, while Air Products provides a more conservatively valued investment opportunity with strong margins. Ultimately, your investment decision will depend on your risk tolerance and financial goals. Let us know in the comments which of these companies you think has the most potential for growth in the coming years. If you found this breakdown helpful, don't forget to like, subscribe, and hit the notification bell for more in-depth stock analysis. Until next time, happy investing!